and see what you sort of discover about yourself. And Neha will walk us through how you can make the bookings on the website. All righty. Over to you, Steffi. What is our first icebreaker question?
Thank you, ma'am. So before I get started, I'd just like to know, am I audible? Clearly audible?
Yes.
Yes? Okay, great. So guys, please send in your answers to the chat box as per usual. Having said that, here's my first question. What word comes to your mind when you think of stock markets? I will also be putting this question in the chat box, but I repeat, what word comes to your mind when you think of stock markets? Share, okay. Chaos, well, complex things, risk, yes, risk, complex things, well, could be complex also. Um, Share market, need guidance, okay. Think we're getting a variety of answers here. None of them seem to correlate. Share market, chaos, complex things, type of investment for long run, go and build wealth. Okay, yes, to build wealth. Exactly what our session is on today. We learn some of that. So yes, I think most people say risk, earning potential, chaos, complex things. It is all of that, but I think we'll get a simplified version of it today, at least today. So, my next question would be, do you feel confident while making investment decisions, especially in the stock market? Do you feel confident investing in stocks? No, no. Most people say no. No, no, no. Most people say no. No, okay. I think the general consensus is that people do not feel confident investing in the stock markets yet. I say yet, key operative word that is. Okay, most people say no. So I think, yeah, need to learn more to get a grip on it, of course. I think it is best to go prepared while entering this chaos that is a stock market. Yeah, so I think most people say no when we are here to learn more on it. So I would request if I could just launch the first poll. Yeah,
Yes,
and
Steffi, go ahead.
here it is. On your screens, do you think equity investments are a good wealth building tool? Majority say yes, they have potential. Some people also say they are new to the topic and would like to learn more. Interestingly, nobody says they do not think they have the potential or, more than a saving scheme. So majority still says yes, they have potential to fetch good returns. Okay, majority still says that, of course, most people also want to learn more on this topic, which is why we are here. Okay, I think I can end the poll now. Please, two more seconds. Quickly send in your votes. Okay, ending the poll now. Over to you, Neha, ma'am.
Thank you. Thank you, Steffi. All right. Let's get started, everybody. Are we all set to learn about equity investing? Please send in a yes in the chat box, just so that I feel like the energy is high in the room today. Come on, let's go. I have 1 hour with all of you. Okay, 35 of us together. It's a long shot to be able to cover everything. But like always, the objective is, yes, the enthusiasm, I feel it. Thank you so much. The objective for us is to build some basic ground level knowledge to start to have our building blocks in place. But before I get started, a quick little introduction for all those who are joining in for the first time. I'm Neha Singh, the founder of a platform called Womoneysta. Womoneysta was launched in 2020 with one single dream, to empower women to take charge of their own finances. We have impacted more than 8,000 and counting, the numbers increasing on a daily basis. We started with personal finance courses, and now we also run multiple financial coaching services, financial planning services exclusively for women, where you can book a one-on-one financial consultation with our team of women experts who will help you get started with your money. Very importantly, I say this in every session, if as a woman you're holding yourself back from managing your money because of the barrier that you don't know math, or you are a non-finance, you come from a non-finance background, etc., please drop it in today's session. For us, we're going to start from the very basic, okay? And after doing our sessions over the last 2 years, we've realized that 80 to 85% women start making their own first investment. So I'm hoping that that is the same result that we see every time we come into the room here. All right, let's start with the topic today, which is start building wealth through equity. So I thought, why not start with the first very important concept of understanding wealth as we see it, right? And I decided that let's have a chat here. I wanted to understand from all of you. I'm going to show you an example. Okay, that's Lady A and Lady B, okay, for simplicity's sake. And I wanted to ask all of you, if you were to figure out, I've given you their monthly income. One is earning 1.5 lakhs per month. The other one earns 50,000 a month. I want you to tell me, who do you think is wealthy? In the chat box, who do you think out of Lady A and B? A is 1.5, B is 50. Who do you think is wealthy? Both can be, okay? Depends on who invests the money. Okay, keep going. Who do you think is wealthy? And you know why I say this? Okay, I say this because many times in conversations, and maybe this is something which without realizing, etc., is happening to you or around you as well. As soon as we hear somebody's income, etc., we start, the first thing is, hey, I think this person is doing really well in life because you know what their package is? They're making 2 lakhs a month. Or you know what their package is? They're making like 5 lakhs a month, right? That's a general tendency of measuring whether somebody is rich or not. Yes, no, maybe. At least this is what I used to experience a lot in the corporate world. This is like, what's your hike and what's your salary? I mean, the benchmark of being rich or wealthy was your salary figure, right? So I thought, let's start with having that conversation first. Wealth versus income. Now, if I was to introduce one more factor, so I didn't get any clear answers. I got the answers that, you know, somebody else could be, depends on sources of income, depends on saving, both can be, etc., etc. Now, if I was to give you one more metric and say, okay, the monthly saving rate for both of them is 25,000. Now, what do you think? Who is wealthy or wealthier? Tanya says 50K. What do you guys think? 50. More metrics, need to decide expenses. So I'm giving you savings. So expenses is income minus savings is expenses. Again, depends. Again, depends on fun. Yeah, we're getting there. But I'm saying what you see on the screen. Let's say, what do I see? So in my opinion, how I would look at this is, while Lady A had huge potential to become or create exceptionally more wealth than Lady B, the fact that today they both are saving the equal amount of money tells me that they might have similar wealth after a period of time. Make sense? Yeah. The fact that Lady A has been so casual about building assets for herself tells me that she is just enjoying life today without really thinking about building wealth for herself in the future. Yeah. So I read this book and recommend this to all of you as well. It's a very beautiful book called The Psychology of Money. It has a full chapter actually, which is dedicated to a concept says wealth is what you don't see. The interesting part is that Morgan Housel, who's the author of the book, he says that when people say, I want to be a millionaire, you know what it typically means? It typically means I want to have $1 million to spend. Okay. And the point that he's making is that if you're going to be spending $1 million, how are you going to be wealthy? Because eventually you have nothing. You're picking up that money and you're blowing it off, right? So spending money to show people that you're rich is actually leading you to become less wealthy. And that brings us to the first myth, which I want to bust for everybody in the room. Anybody here who feels, hey, I don't earn enough, and hence, wealth is something which I just have to aspire to when I'm earning this much or that much. And I hear that so often that, hey, Neha, how do I invest? How do I build something of my own? My earnings are so little. Wealth is not an outcome only of your income. That can be an important factor provided you use it wisely. Wealth is equal to the assets that you build. Okay, so that's principle number one. Like that's the first principle of wealth creation, the understanding of what is wealth versus what is income. Having said that, I want to ask all of you, what are assets? Does anybody understand? You've heard this word assets. What are assets? What do we mean by assets? Can you give me some examples? What are assets? My phone. Okay, so let me give you an example. Is having a car an asset? Is a car an asset? No. Okay. Stocks, bonds, mutual funds, property. Yes, property is an asset. Absolutely. So I got one beautiful definition here. I think Simran was there. Assets increase in value. Higher than inflation, lower than inflation is secondary. But okay, Divya also has a beautiful definition. Assets is something that appreciates over a period of time. Yes, a car is an asset, but it's a depreciating asset, right? It loses value. When I'm measuring my wealth, I want to have more of appreciating assets, things which are going to go higher in value over a period of time, right? So that's first principle. Don't get bogged down because you earn less, etc. Everybody can make wealth. It's just about starting from the understanding of what is wealth versus what is income. Let's come to principle number 2. So a lot of you had said that there are other factors as well, right? So principle number 1 is I need to start saving. Principle number 2, are savings, is it enough that I'm saving? Is that enough? So say, again, we come back to lady A, lady B. Okay. We know they're saving 25,000 every month. Now, lady A decides to park this in a bank account at 4%, and lady B decides to invest this at a higher rate of return, approximately say 10%. They both want to hit a target asset size of say 1 crore. Okay, they both come to me and they say, hey, listen, I want to reach 1 crore. What do you think is going to be the time period that they're going to take? Are they going to hit that number at a similar time? No. Let me throw that number at you. At the return at which lady A is growing her money, she is going to take 21 years to hit that target. Okay, let's assume for now her income is the same, etc., etc. Her saving rate is the same. And at the rate at which lady B is investing, she's going to save 6 years of her time and hit her target earlier. I'm going to park you with another thought. So first thought, wealth is not equal to income. Second thought, okay, wealth is something which gives you freedom. Tell me if you agree or disagree. And wealth is something that gives you freedom to make choices. Wealth is something that also gives you time, the freedom to use your time the way you want to. Right? So people who focused on wealth, they think of time as a resource and they say, hey, listen, the faster I'm going to get to a point where I can do whatever I want, right? I can do it at my time, I will feel wealthy. Okay? You feel free to disagree. But principle number 2, I'm just buying time by making my money work harder, right? So many of you said savings are not enough. I agree. Step number 1, save. Step number 2, saving is sleeping money. Investing is money working hard for you, as hard as you are working to earn it. Yeah. And principle number 3, Neha, I don't want to be wealthy. I'm perfectly fine with, just maintaining my lifestyle. Okay. There are a lot of people who also want to just have their lifestyle. Just make sure whatever I'm doing right now, I can just maintain it. The unfortunate part is that there's a hidden tax called inflation, which is hitting all of us, right? And the cost of not doing anything with your money is also very high. You're actually losing it. If you were to buy something which was worth 1 lakh in 2021, 10 years later, if you wanted to buy it, you would have to pay almost 2 lakh rupees by just doing nothing, right? That's just the value of the service or the product is going up. So in a sense, if you're not investing your money, at least at inflation, you're not going to be able to buy that value of that service or product. Now, supposing you said, okay, I'm going to play it safe. I'm going to invest approximately around inflation, right? 1% above inflation. You invest at a rate of approximately 7%. What starts happening is that you can afford this in the future. You can afford that lifestyle, but it's like a race that you're constantly going to be in. You're not going to get off that race because whatever your money is making, you're just sufficient enough to kind of meet your lifestyle. Okay. That's not wealth. Again, that's not wealth. That's just keeping up. You've got to constantly keep working. If you start taking some risk and increase your risk-taking ability and start looking at returns which are slightly higher. So say if I was to say, I'm going to invest this at 11%, just 5% above inflation rate. This is where the magic starts happening. This is what I like to call as the wealth buffer or the cushion. This is where real money is being made. So I can spend that 2 lakhs, right? Because now I've made myself approximately 3 lakhs. So I can spend that 2 lakhs and yet have 1 lakh extra, which I can go back and redeploy and earn more on. This is what you're aspiring to create. Most of us, due to lack of fear or knowledge, tend to sit either in cash or at extremely low rates of interest where we're just keeping up, which is why building wealth is an issue. So 3 principles, 3 steps. Step number 1, I start thinking, my mindset shifts from income to savings, right? The mindset of wealthy people is not focused on how much I earn. It's how many assets am I creating. From savings, you start moving to investments, not sleeping money. No longer get rid of that piggy bank habit, which you were taught as kids. You've got to make this money work hard for you. And finally, investments which beat inflation significantly, right? So first, get these 3 principles of wealth absolutely clear in your mind. And that's when wealth creation is going to start happening, right? Once I've defined wealth, we're going to move on to the next very important part. So 3 steps, very clear on wealth creation. First, I don't bother so much about income. I focus on my saving to investments, investing to beat inflation substantially. How can I do this? So traditionally in India, we were taught to look at real estate as a wealth creating asset, right? Do you know why a lot of parents insisted, at least in our generation, that, hey, you got your first salary, second salary, first job, 1 year, now go buy a house, right? It's something which still happens. That is the smartest way that they could get us to kind of create some asset, like a forced saving, which we would do and build ourselves future security and create wealth, right? That was the traditional approach which has been taken. Today, even with small amounts of money, you can build wealth through something called as equity. Okay, I'm going to run you through the basics of equity and the basic terms that we come across. So let's start with what this term equity means. Equity in itself, the simple definition is ownership. When I have equity in something, it means I have an ownership stake in something, right? Let me give you an example. If I want to start a bakery business, what do I require apart from skills and other things? Like, what is the main requirement? Tell me. Like skill set, of course, and interest and passion, all that, and market and audience. We know that. I require money, right? I have very nice. So I have lots of people who use nice words like capital. I like to use simple word like money, okay? Funds, like some of you said, which is a fancy word for that is capital. There are two ways I'm going to get that money. Either I'm going to put my own money, okay, or I'm going to get investors, which is also owners' money, or I'm going to borrow money from a bank, etc. Right? Owner's money, borrowed money, which means two major sources of funding my business. Either it's going to be debt, which is a loan, or it's going to be equity, which is ownership. Okay. Now, what are the key fundamental principles of equity? Is there an assured return I'm going to get? No. Is there a high risk associated with it? Yes. I don't know whether, what we're going to make. Can there be potentially unlimited upside to this? Like it could be massive return that I can make? Yes. But does it depend on the business performance? Is this something which, in case the business goes bankrupt, I'm going to get something back? I don't know, right? So high risk, no confirmed guaranteed returns, right? And the chances that I'm going to totally lose all my money. That's what equity investing is about.
Neha,
Debt on the other side.
Could we interject? There is a hand raised for some time by Kulshestra. Would you want to unmute and ask the question, please?
I think, but I'll have to go 2 slides back. It's just one quick thing around the inflation percentage. So you said from saving to investments, and then from investment to beat inflation. And I'm sorry to pull you back to the slides. So just on the last point, do we need to consider the current inflation while investment? Do we need to have those things in mind? Do we have to go to those concepts as well?
Yes, absolutely. That would be a great thing to consider. Having said that, if you were to look at traditionally over a period of time in India, the government has a range of capping inflation at a maximum of 6%. So any time inflation starts hitting 6, the government is going to come in and really take aggressive measures like what we're seeing currently, where they're going to try to capture inflation, etc. So you can, if you're working with investment options over a period of time, while on a while you're reviewing your portfolio, it's a good idea to do this. But if you're working long term and you want to work with averages, it's better to go with an average inflation rate of anywhere between 5 to 6% in India.
Perfect. This is really useful. Thanks, Neha.
Welcome. Okay. Let's go back to equity, right? Okay, so I wanted to establish these principles because this is super important and it should be very clear when you're entering into this territory that you're now going to become an owner in a certain business, right? Because all of us can't have our own businesses. So what we do is we participate through equity into the stocks of other companies. Where do I buy? Where to go? Right. So let's get started with some terms that you all hear. What are the 2 stock exchanges in India? Where can I buy this? I like to think of this like a mall, right? If I want to go shopping for businesses, where will I go? What are those malls? BSE, NSE, Nifty, NSE, BSE, Nifty. Yeah, we're going to get these numbers. Let's get these terms also like super sorted, right? So think of these like the 2 malls where you go shopping. One mall is called NSE, the other mall is called BSE. National Stock Exchange, Bombay Stock Exchange. There was a time where there were regional stock exchanges as well. Today, it's literally, there's only Calcutta Stock Exchange, which stays. Everything else is now combined between NSE and BSE. Okay, BSE being one of the oldest stock exchanges across Asia. How many? So again, just visualize malls, right? Easier for us to connect. Think of NSE and BSE having lots and lots of shops, which are basically lots of stocks, lots of businesses. NSE has approximately 2,000 shops, 2,000 businesses to choose from. BSE has approximately 5,000 shops to choose from. Can there be an overlap? What do you think? Can there be an overlap of something which is on the NSE mall as well as the BSE mall? What do you think? Can one company be on both malls? Yep, absolutely. Can I buy HDFC Bank off NSE or BSE? Yes, absolutely. Can there be some extra shops in BSE? Yes, absolutely. Right. So going forward, what are the stock exchanges or the malls? NSE and BSE, not Nifty. Okay, I'm going to get to that. Will there be a price difference? Good question by guest. Yes, there could be a price difference. And we're going to see that. All right. Timing of the mall, everything on the right side. So these exchanges are manned or supervised by SEBI. Okay, who takes care of the entire equity markets, capital markets in India. What are the stock exchange trading hours? Monday to Friday, 9:15 to 3:30 is when this mall is open, pretty much, right, to shop. Now let's talk about Nifty. I heard someone wrote Nifty and Sensex. Okay. So what are Nifty and Sensex? So clearly they're not the shopping malls, but what are they? If not the shopping mall, what is it? What could it be? Aggregator. Okay. You all have heard of Nifty Sensex, right? Retail shops. Okay. Indexes. Evaluators. I think Divya is just having fun with me now. Index funds. Okay. Yeah, see? Keep humoring me, girl. All right. Okay. So an indicator of top 50 stocks. Yes. Let's go. So we'll get to that. So we all heard of Nifty and Sensex? You have all heard now of these terms at least. At least say yes. So that I know that yes, I'm not teaching or talking about something you all have never heard. You all must be hearing Nifty gir gaya, Sensex pe aise ho gaya, something like that, right? So what is this Nifty and what is the Sensex? Let's just start from there. So we got that right. One of you answered it. These are indices, or let's say it's an index. Okay. What is an index? So let me give you another example. Okay. If you're unwell, if you're feeling unwell and you want to check what is your temperature, what is the device which you use? This is not a financial question. Yeah, this is a very simple question. Acha, fever जैसा लग रहा है, तो what device will you use? I hope you all use the same device that I use. The thermometer, right? We all use a thermometer. Now, do you use the thermometer and you scan it all over your body, like you touch it all over and then you figure out what's the fever? What do you do with a thermometer? You put it in one particular, let's not talk about this kind of place, right? And you keep it there and then you check and then you get a temperature, correct? Yeah, place it in this God-forsaken place and then figure out your temperature, correct? Think of the index. Anywhere you read this word index, right? Think of that like a thermometer. Okay. Remember the mall? It's a huge mall. It has 5,000 shops. I'm standing outside the mall and I asked my friend, what do you think? How well is this mall doing? Is it doing well or not? And my friend is like, hey, listen, let me go to every shopkeeper and figure out whether they're doing good or not. Or you could just have some sort of a basket. I just put the thermometer in, I pull it out and I say, hey, this tells me that this mall is doing really well right now. This tells me the market sentiment is really great. Could I do that? I could do that. That's a smart way of doing this, right? So just to make sure I'm getting a sentiment check, these baskets have been created. So in your head, you should visualize this as a basket, right? Nifty is a basket of the top 50 most actively traded stocks on NSE. Typically, which also means these are the largest companies on the stock exchange. So in the mall, if there's a Chroma store or a Reliance Trends or a West Side or like those big stores, right? If I was just to check how those are doing, it'll give me a good idea whether the mall is doing good or not. It's almost like that. What is Sensex? Sensex is the top 30 most actively traded stocks on the Bombay Stock Exchange. That's it. That's what they are. There are two baskets of 50 and 30 stocks, which are telling me what the market sentiment is. Does that make it clear? Like that? Yeah? Wow. Easy. How would you define actively traded stocks? So there's a rule behind that over the last 365 days, they have to be traded for at least a minimum of 300 plus days, etc. But look at it from a perspective that actively traded typically are the largest companies in every sector. So it's well diversified across 13 sectors, and the top companies in each of the sector would be part of this basket. Okay. Yes, good questions. Are they both governed and regulated not by government, but each of them have a body which is monitoring them? Every 6 months, there's a committee which sits, reviews which are the most actively they have their criteria, They will review these baskets, and these baskets, you can think of them as almost as self-cleansing baskets, right? So what was in the top 50 10 years ago is not going to be sitting today, because every 6 months they're going under a review. Do they meet this checklist of criteria, actively traded, there's a criteria. If yes, they continue to stay. If no, they're thrown out of that basket. Someone else is put into the basket. Active doesn't mean more successful. See, because this is also reviewed, and like Nifty and Sensex are like the flagship thermometer checks of our country. Typically, and I don't know how you define successful. Typically, these baskets tend to have the market leaders. And the second thing that you will notice is they tend to have the market leaders across industries. Okay, so we're going to also get into this and have a peek into what Nifty 50 looks like. But by successful, if you mean like, I don't know, big or most revenue or most profit, but say, think of them as leaders, right? They've been there for a long period of time, stable businesses, credible businesses, making money, maybe not making the highest amount of sales, maybe not making the highest amount of profits, but fairly stable and large businesses, right? Reliable, right? Yes. So we'll have a look at that as well. Is that clear? Till now, what I've done, really basic concepts, very important to understand. Now I want to ask you a question. If somebody tells me that, hey, Nifty is down, does that mean my portfolio is also going to be down? Nifty is down today, market has crashed today. Does that now mean that my stock portfolio is going to be down? Not necessary. That's it. So the first thing I want to leave you all with is the sense of panic. The questions I get at the end of many sessions. The markets are down today. It fell by 700 points. Should I be investing right now? Hey, listen, I mean, you're going to get into the mall. There will be some shops which are doing well, some shops which are not doing well. You've got to learn how to pick those shops, right? So yeah, that's something which you shall park with yourself. Okay. So I thought, let's spend some time doing some practical work as well. You all want to do some practical work? I thought of going through some 2-3 websites with all of you. Yes, no, if you say no, that's all right. We will not do it. Only if we get yeses, then we will do something. Yeah? All right. Saloni is extremely excited. I love that. All right. So first I thought, let's do a little recce of our first mall, NSE. 1 second, let me share my screen. So this is what the NSE India website looks like. Okay, it's a nice, fairly crowded mall, lots of action happening. But what is it that I want you to look at? Let's start by looking at identifying what we like, which is Nifty 50. One thing which you must know is that Nifty 50 and Sensex are like flagship, like the main important indices. But there are also many other indices, like you'll see Next 50, mid cap, bank, etc., for industries, for different segments. So there are many other indices as well. Okay. Let's see if I was to go and explore Nifty 50 a little. I'm going to go to indices and I can see all the indices here. Can you see it? These are all like baskets of different purposes. Let's stick to what we want to know. Let's start with Nifty 50. When I click on Nifty 50, what it's going to do is it's going to show me, some of you are asking, like, are these the most successful companies or not? So you can actually come here and have a look at what are the stocks which are in the Nifty 50. Can you all see this? Bajaj Auto, Hindustan Unilever, Hindalco, Britannia. So most of these names would be brands which you would have heard of, companies which you would have heard of, right? We're good till here. Now I'm going to do another very simple exercise, which I like to follow when somebody just throws a name at me. I'm going to take you to another platform, which is Google Finance. Okay. So supposing you were to ask me, Neha, how has Nifty 50 done in the past 5 years? Right. So I just go to Google and right on top, I write Nifty 50. And the first thing that I see is something like this. Right. This is nothing but a chart from Google Finance. And I thought today, as a starter, we can just have a basic read of what's written on this chart. So just go here, click at more about Nifty 50. How can I read this if I was looking at it for the very first time? It gives me a number here. Okay. It tells me what Nifty 50's value is today. When I see this red, it tells me as compared to yesterday, it is down. It's negative. Okay. I can see this over 1 day. Then I go and click this over last 5 days, over last 1 month. How has it been performing? Over last 6 months, year till date. That's beginning of this year, 1st of January till now. 1 year ago, right? So if you go here, it'll pick up approximately around 1 year ago, 27 Jan, where was Nifty? Okay, let's pause here for a minute. Now, can you look at this and tell me how did Nifty do over last 1 year? What do you think the returns were? How much did we make? Has it gone up? Gone down? So that number on Nifty 50 is like an average of top 50 stocks. Yes, for the simplification, it's a weighted average. There's a calculation to it. So think of it like right now as an average. Okay. Divya says, I don't know. Okay. If nothing works, go with the color. Green means good things. Positive, go. Right. So as soon as the colors become green, look at this. When I did 1 day, it was red. Red means you look at this arrow, it says downwards. You look at this number, it says a minus, which means bad. Right? And look at 5 days, bad. Look at year to date, still bad, red. 1 year. Now, can you all tell me what is the return that Nifty 50 has made? It's been up 4.57%. Yeah. So in any time, absolutely. So anytime you want to test out any stock, we'll do some examples here. Over the last 5 years, if I have to look, how has Nifty done? It's given a return of 66%. Right. Maximum. So Google Finance doesn't take it right till the beginning, but it does take it adequately far, 20, 22 years ago. Is it like a background check? Yeah, you're kind of looking back and saying, hey, listen, how has this done over a period of time? Right. So if I was to look at Nifty, I had invested in it in, say, even before 2000, it was at 1,000, right? So this is for all those people who feel like, markets are inflated, etc. Personally, I have watched the markets and I've been working in the industry since 2005. I've been part of one of the biggest, worst financial crisis the world has seen, including our markets around this time, where at this time people had the markets will never recover. It's doomsday. It's the end of the world. But look at that. We were at 2,700. Today, the Nifty is at 17,800. Today, again, people are saying this is a peak. We're never going to go further, etc., etc. So I'm a big believer of long-term wealth creation through markets, through simple, if you just look at these numbers, if you were to look at Sensex, let's just write Sensex here. And it's going to say BSE Sensex. You can do the same exercise, what I just did. You'll see the results are fairly similar. If I had invested in 2000, I'd be really, really wealthy right now. Yes, absolutely. So, one of the beautiful things about stock markets is that, and this is what I read in many books as well, and I've experienced this phenomenon as well. When we buy real estate, okay, when our parents tell us, or when we go buy real estate, when I ask people, what's your time horizon to stay invested in real estate? Typically, the answers would be like 5 years, 10 years. I'm not even thinking of selling it yet. It's going to be for my kids. Maybe, 15, 20 years, something like that. Is that right? Do you agree? Whenever we are buying real estate as well, or when we are giving it a thought, is that the way you look at it? Yes, no, maybe. That's a mindset. I mean, but as soon as we start talking stock market, right? Think of it like investing in a business. Can you make money in a business in a day, in 2 days? Yes, you could at times, but that requires a lot more study, etc., etc. That's a different thing. Could you make money in a business over a long period of time if you had the same kind of patience of 5 years, 10 years, 15 years, 20 years? That's all it is. The only difference is every day, because you're seeing this ticker move, you feel the need to act. You feel the need to do something about it, right? Which is a behavioral issue. With property, luckily, it's such a big amount of money that every day you can't go. If you could, I'm telling you, people would be selling real estate also by the minute, right? But we can't. So fortunately, it just has this way that you can't see a ticker on real estate, but you can see a ticker on the Sensex and the Nifty, which prompts you to act every day. It's down today, I need to do something. It's up today, I need to do something. And that's the big difference, right? In terms of wealth creation, traditionally, both real estate and equity have similar track records. Absolutely similar track records, right? So this was about reading it. I wanted to show you one more thing. Let's say if I was to look at Nifty 50, and I'm curious to see, okay, how has, say, Britannia performed? So what you can do is come down here, write Britannia, okay? You're going to get these two options. So in the beginning, we talked about two malls. This is the price of Britannia on mall number NSE, mall number 1. And this is the price of Britannia on BSE, right? So what you see under it is the code. So let's say I click on this. You could see the price difference as well. Lots of questions. Ladies, please park the questions. I will take question and answer at the end as well. Unless you have a question on this page, then you can ask me. And I will not teach you everything on the page today. Britannia Industries. Okay, now I have questions before you tell me. What is the price of one share if I were to buy Britannia Industries today? What is the price of one share? Is that clear? Question. So two people have given the correct answer. You all are with me? The price that you see is the price for one share. Question. Can I buy just one share of Britannia Industries? I have 4,000 rupees, 4,500. Can I buy one share? Yes. Can I buy half a share? I only have 2,000 rupees. No. Okay. Basic principles. Got to be clear. I can buy one share. Now, question back to you. If you eat Britannia biscuits, is it possible that you go and buy yourself biscuits and also make an investment in Britannia Industries? Yes or no? Yes. Possible. Sometimes we overthink this, right? Sometimes the easiest way to get started is by looking at some products that you're consuming. You see a lot of people consuming it, and you can just go and start investing. You don't have to, you're not going to lose your entire, you lose like 5,000 rupees. Like, seriously, give yourself some leeway to learn and make mistakes, right? Why today's objective is not to make you a stock expert. My objective is to get rid of that fear, which you all have, right? Let me show you a story about a beautiful stock called, anybody heard of Nestle? Whoever has kids has heard of Nestle, right? Because right from the minute they're born till like forever, they're just buying Nestle products, right? Nestle, Maggie, you've heard of Maggie? Maggie, company which makes Maggie is Nestle. Here, let's have some fun, right? So Nestle today is fairly expensive at 20,000. But if you were somebody who got the money, imagine back in 2018, priced at some 7,500 rupees. Every time you go out shopping, buy Maggie and buying all that Nan and Munch like Divya likes to have or whatever, you come back, say, hey, I'm going to buy one stock of Nestle. One stock of Nestle every month. That's it. That's all my wealth creation journey is about. Look at the amount of money you would have made. 171% by doing this, that. No rocket science, nothing else that you need to do. I'm not even teaching you the basics of price, year range, 52-week high, nothing. Look at this. You were smarter, started younger, 675% return, right? So are these very difficult stories to identify? No. Let's see another few stocks. You can go and play around today. This is your homework. I'm running out of time. Otherwise, I can spend all day doing these stories with you. Maybe see, let's say Maruti Suzuki. Everybody's heard of Maruti Suzuki. Yeah, you just make it sound so simple. It can't be that simple, really. No, it's not. We've got to start with making it simple, right? Okay, so Maruti Suzuki, one share. There is no such thing, Rashmi, that are we late to invest? Price per share is at an all-time high. I'm not a believer of this, right? I told you when I was in wealth advisory back in 2010, nobody was willing to buy. We kept telling people the India story, growth story is in place. It's a growing economy. The richest of people were like, no, we can't buy right now. 10,000. The Sensex was at 10,000. Today it's at 60,000 for Christ's sake. So do I believe that this is going to go down? Do you think the Indian economy is going down? I don't think so. None of our indicators are looking negative, right? So if you have the broad focus around the economy, you have a long-term horizon, this is going to go positive. Okay, let's come down. One last shot. Maruti Suzuki. Please tell me what is the rate at which you'll buy one share of Maruti Suzuki today? Everybody, what is the rate if I had to buy one share of Maruti Suzuki? Okay. Now, I'm going to show you a few things. I'm going to ask you questions. Over the last 1 year, has Maruti Suzuki stock given a profit or a loss? Do I think that it's made a profit or a loss? A loss, right? It's just like 50 rupees down. Over the last 5 years, has the Maruti Suzuki stock made a profit or a loss? Yeah. Hey, don't make decisions based on this alone. I'm just making you all comfortable. Huh? Don't go back saying Neha said just do this and then start investing. Okay, that's not the way. This is the basics. Okay. Now, when I click max, what I can start doing is I can start looking at it from a longer term perspective, right? So if I had invested in 2010, the stock was at 1400. Can you see that price? 1400, right? Today, it's at 8,000. So over a period of time, over the last 10, 12 years, have I made money on this? Absolutely. Right. So this is how you start reading. And one of the things that you can try doing as a practice is just go to the Nifty 50, put those stocks down, see how their behavior has been over the last 1 year, 5 years, over a longer period of time. What's wealth creating? What's not been wealth creating? Just try doing this basic exercise before you start jumping into how to do prediction of stocks. They're not doing that today. Okay. But first level was to just get you comfortable. We'll also do how to do prediction or like what are the factors that one can look at when they're trying to analyze stocks, right? So longer is good in this case. Yes. Okay. So was this fun? I just touched upon something a little bit. I still have some more slides to share and I have 5-7 minutes. Was this fun? All right. 2 yeses, seriously? How many people in the room? The 40 people and like 2 yeses. 3, 4. Questions in the end, huh? Please, I will talk about that. Let's go. I have a few more things to share with you. Are stocks risky? We started with some people saying, yes, it's risky. That's the sense. So I wanted to just highlight 3 factors which can help you start minimizing your risk when you get started with your investing journey. The first factor is approach. The second is the time period. And the third factor is diversification, right? What do I mean by approach? Are you going to take the approach of gambling? Many times people think of stocks as gambling. If your approach is going by blind tips, not putting any time to learn, etc., on your own, or through the help of an advisor or a mentor or a teacher, your risk is going to be very high. On the other hand, if you're leaning in on experts, also educating yourself, learning about methods and structures, your risk is going to get mitigated. Is it going to be cross? No, you're investing in a business. It can never be cross. but you can minimize that risk, right? Second, time period. Am I investing for a very short term? Am I trying to predict the movement of the stock in a second, hour, in days, 2 days, 1 week? The shorter the time period, the higher the risk. Do people do this? Yes, it's called trading, and that is based on a study of technical analysis, right? It's not something they do ad hoc. That also has a study behind it. But does that have higher risk? Yes. Over the long term, you're thinking of fundamental investing, where you're looking at the fundamentals of the business. Is this business growing? Does it have the potential to be a standout from a competitors? So there are different factors that you look at, right? Is there higher risk in a short term? Yes. Is there lower risk in the long term, or you're minimizing your risk? Yes. One of the fun facts which you can take back is that the Sensex, over the last 42 years that it's been around, has given positive returns 32 times. And yet the poor thing has a bad name. I'm going to lose money. I'm going to lose money in stocks. I'm going to burn my hands, right? So 32 out of 42 is not a bad score, right? So just 10 years, where on a year-to-year basis, it's given a negative return. Okay. And if you were to look at another statistic, if you were to invest in the Sensex for a period of 10 years, there is no single such time period in which you would make a loss. Like you entered and you exited at a loss, right? And yet, poor stock market has a bad name. And finally, very important, are you able to bring diversification, which means all your eggs are not in, I love the technology industry, let me just buy every technology stock, right? Or I'm going to buy so many stocks that I can't manage all of them. Over diversification. Right? The right way is to have a portfolio which is between 10 to 15 stocks, a maximum of 20. I would say 10 to 15 is a good starting point if you want to do stocks on your own. The more limited your diversification, higher the risk. The more adequate, widely spread across sectors, the lesser the risk. Okay, so you can just take a snapshot of this. These are 3 factors to keep in mind when you're getting started. Don't make these mistakes of starting with blind tips, starting with a very short-term horizon, and just having limited sectors that you get started with. Finally, very important, is the only way to get into equity is through stock market, by investing directly through stocks. This is a very important point I want to leave you with. It's not true. There are many equity products which you can start through, right? You can look at mutual funds, you can look at exchange traded funds, you can look at portfolio management services or small case, and then you can look at investing directly through stocks. What do each of them mean? Mutual funds is a pool of money given to an expert who's going to invest that money on your behalf and give you the return, right? So there is no time effort that you're putting in. An exchange traded fund is again a fund which has many stocks in it, but the only difference is it is listed on the stock market. Okay, so you can buy and sell it anytime, just like a stock, but it's not one business, it's many businesses, like a mutual fund. A small case, think of a small case like, we all do Diwali shopping. Everybody does Diwali shopping, Neha, come on. So in Diwali shopping time, when you go to these big stores, have you ever come across hampers? Like either you go and pick up and you like pick up those things and make a goodie bag yourself, or there are these companies that make the preset hamper. You come across that? Yes, no? Maybe somebody like me who goes and buy those hampers, right? So small case or portfolio management services are basically like those hampers where there are experts who are working at the back and creating this very customized hamper which would work for you. So it's way more curated, right, than a mutual fund. Mutual fund has many more stocks. PMS would have limited stocks. So hence, it's a product which is generally for slightly higher net worth individuals, right? And finally, the last step is, of course, what we discussed, that you go directly buy a stock of a company and you start managing on your own. Which route to choose? I'm going to leave you with 3 factors and I'm going to let you decide. Choose your route basis the knowledge that you have, the time that you have, and the amount of control or customization that you're looking at. If you don't have knowledge, if you don't have time, oblique interest, and your need for customization is also very low, mutual funds is a great option to start with getting into the stock market through equity mutual funds. If you have some knowledge, you have reasonable amount of time, you want some more control, start moving towards ETFs and small case. You've built knowledge, you have time to give, and you're definitely looking at having much more control and customization, then go into direct stocks. So my last tip, if you're a first-time investor, please don't jump to the last product. Try it, but don't look at it as a key investment product for you. It's more of a learning stage. Once you become comfortable through these products is when you can gradually start moving to a good, solid direct stock portfolio. Yeah. And with that, I'm going to leave you all with a simple way that you can book a one-on-one slot with us. And also, I'm going to leave you with a book recommendation and a course recommendation. A wonderful book by one of the famous investors in India, by Saurav Mukherjee, is Coffee Can Investing. You can pick this up. It's an easy read for a newbie and very relevant to the Indian markets. And if you like what we're teaching and you want to know more, we have a course on the Womoneysta website called The Basics of Stock Investment. It's a 2-hour long course, many more topics included in that. So you can go ahead and pick that up as well. With that, we're going to take a breather, and I'm happy to take up some questions. And thank you, Divya. And you all can unmute. And
we have actually 2 minutes left, but I think, Neha, you're probably willing to stay on.
We'll stretch. It's all right. I mean, it's a little, interesting topic. So happy to take up 5-7 minutes.
Right. So that's where I was coming to. So I was just telling people if, lots of questions you've mentioned in the chat, if you want to unmute and ask your questions directly to Neha.
Hey, Neha, it's actually,
Actually.
this is great. First of all, thank you so much. Any recommendations for investment, or where should I be starting if I'm doing it outside the UK? So right now, I've moved to the UK, but I'm very confused with what I have back in India and how should I be starting it here?
Okay, I'll have to actually dig out some UK specific books for you. But if you're looking at, if you have an Indian portfolio, you can start by just kind of streamlining that, because amongst international markets currently, I would personally look at the US market or the Indian market primarily, simply because the US market is the largest market, has some great, interesting businesses which are listed there, and Indian market for the pace and comfort and familiarity. I would also have to do my own extra research to come back to you with what I would do in UK, but I've not really touched the UK market, frankly, myself.
Okay, sure. No problem. Thank you.
So
for
let me
this.
see if I can dig out something and share it with the team here.
But this is really fun and great. I can't appreciate more. Thank you so much.
Thank you. Appreciate. When do you decide to exit from an equity investment? This is a great question, right? And I'm going to pick this one. So I'll tell you how I do this for myself. So generally, I am looking at it from a perspective. I've built like 2 levers around this. The first one is a goal-based lever. So if it's a fairly long-term goal and I'm looking at a certain investment for that goal, I typically don't tend to touch, get too much of in and out for basis the goal. The second way to look at this is if I am analyzing the fundamentals of a stock, right? And if it's a long-term goal, you can go ahead and do this on an annual basis. And I start seeing that there is fundamentally some shifts, right? There are factors which we do when we're doing fundamental analysis. And I see some big shifts happening. That could be a red flag for me, and I might take a decision to exit. Also, a very important thing while I'm choosing to exit is to see where will I park this money, right? Where will I exit from and then enter into next as a long-term investment. So for me personally, those have been the metrics. Third, which I used during COVID, honestly, is some stocks which made super normal profits. Like for me, super normal profit is anywhere above 25%. I will look at that stock very intently. If I've started hitting 100%, etc., great time to kind of book a little bit of profit and see if you want to keep that in the same stock or put it in something safer or put it in another stock, right? Because that's exceptional amount of return. The text is not close. So the course recommendation as well as how to book the slot, I'm just going to show you guys. You can just go to our website and let me just do that, make it simpler. So if you go to womoneysta.com, you have your consultation here. You can go and schedule a free discovery call. You click on this, you will see some slots which will show up. And you can just go and book a slot which works for you. Yeah, so if you just be kind to this, it'll show you that we have some slots available. Just click on this, feed in your basic information. It's very, very basic information, like how you found. So there's nothing really confidential that we collect, and you can book that slot and have a chat. If you want to go and explore our courses, you can go click on the courses page, and the course that I was talking about is this one. It's called Basics of Stock Investing. It's right here. You can click on this, pick it up. It's fairly reasonable. It's a 2-hour course, which takes you through 3 key fundamental factors that you can look at, right, while evaluating stocks. So yes, I will come back to more questions.
There's another question here. There's someone called guest, but perhaps if you want to unmute or we read it ourselves. Personally, do you do direct stock investing or you use small cap, small case,
Small case.
for your own investments, small cap? Yeah.
So I've used all methods, right? I do mutual funds, I've done ETF, I've done small case, I've done direct stocks as well. To be very honest, I use my direct stock portfolio for a different goal. I use small case for a different goal, and I have a mutual funds for a different goal. So small case helps me kind of just make sure that it's a more systematic way of looking at it. Direct stocks are for my retirement goal because I really enjoy doing that. So I have segregated it in that manner for myself. Neha's talking about US market. Well, we could set up something around international investing with a focus on US market. If you like, so please do tell the AFH teams and we can set that up as well. Yep.
I didn't quite catch that. What was the request here for AFH?
For US market. So I got a request. Could you please share something for US market as well?
Yeah, I think we've got one for US, one for UK. Okay. Yeah.
So we do have a program called International Investing with a focus on US market. So maybe we could pick that up as we go along at some point.
Yeah,
All
you've
right.
made some book recommendations. I think you're going to come back on the UK book recommendations. So I think lots of good questions, and as always, really power-packed session. I'm sure everybody had some, takeaway. For me personally, the analogy of shopping mall and looking businesses as the brands that we look into malls, I think is a really good analogy in the head, and a lot of mind shifts are also needed, before we all start taking actions. So once again, reach out to Neha. She's also been our, the first one to believe in the mission of She Knows Money and continues to partner with us. And I know she will be very excited if you guys reach out to take the time she's offering. With that, I think we are going to say thank you very much to Neha first, and also to the audience joining us. And our next session is, I think, Thursday next week, 6 to 7 p.m. The topic will be shared on Monday. So keep an eye on the social channels. And if you're members of Aspire for Her or members of the Womoneysta community, keep an eye on the emails and both communities' social channels. Thank you very much, and wish everybody a lovely evening, especially the ones joining from India. It's evening dinner time with your families, so have a great one.
All right. Thank you. Bye-bye.
Thank you. Take care. Bye-bye.
Bye.